Buying a house comes at a cost, but what are they and how much are they? Well, in this video, I'm going to tell you exactly how much you'll need to pay up front when you're buying your first home. So stay tuned and let's find out. So let's start with the easy one, the bank. So the bank will charge you an application fee of anything of about $250 to about $1,500. Some banks might even charge you a percentage of the total loan amount, and that's normally about 1% of the loan amount. There might be some maintenance charges as well, and if you have a revolving credit facility, then they generally charge between $10 to about $20 per month on an ongoing basis. Now, if you want those fees waived, go through a mortgage advisor, because generally a good mortgage advisor will be able to get you the loan with a zero application fee. Now let's look at professional service fees. They are generally a valuation, registered valuation, a builder's report, a limb report, and also conveyancing. So let's break these four down. So if we start with the registered valuation, that could be anything from about $600 to probably $1,200, depending on the size of the property, the type of valuer, the region. There's a few factors that actually make up that price, and the bank might require you to get a registered valuation. If they do, then by all means you'll need to use one of their bank approved valuers, but don't pay that cost unless the bank actually asks you to do that, because you might spend that money and it's actually not a necessary requirement. So just ask the bank first before you start spending the money on a registered valuation. The next two costs, a limb report and a builder's report, are generally only conditions you put into the sale and purchase agreement to safeguard you as the purchaser. The banks don't normally require those reports, but for you as the purchaser, it's probably a really good idea to pay the money up front and make sure you're buying a sound property. You don't want to buy the property and then a month or two later find out that something's actually wrong that could have been picked up by the builder's report. Now, a limb report is normally anything from $200 to about $400, depending on the council. And your builder's reports are normally anything from about $500 to roughly about $1,200. Again, depending on the size of the property and also the type of builder. These seem like a lot of money to spend up front, even if you're not going to buy the property, but rather spend the money now and make sure you're buying a property that's worth it than finding out you've bought a property that you probably didn't want to buy in the first place. Now, the last professional fee you need to pay is for conveyancing. So your solicitor needs to handle the property transaction, and they'll also advise you on any legal matters that might arise from purchasing that property. The banks require you to do this through a solicitor, so make sure you pick one that has maybe a fixed fee so you know exactly what you're going to get into, or just discuss that fee with your solicitor up front so that you know what the cost will be. But in general, they charge anything from about $800 to about $2,200 just to do a straightforward transaction. If there are any other conditions or you need them to do more work for you, obviously the fee will be much larger, but again, discuss that with your lawyer before you proceed with the transaction. Now, the last cost to take into account is the cost of your mortgage. There are normally two types of costs when you're applying for a home loan. One is the repayment, and the other one is the total interest you're going to pay over the term. So your repayments are worked out over the term of the mortgage, which is normally about 25 to 30 years as a standard, but you can go shorter. And then you can also pay those repayments either as a weekly, fortnightly, or a monthly basis. The other cost is the interest over that period. So if you're taking a 30-year mortgage, obviously your interest cost is going to be much, much larger. So let's look at an example. If we use a loan amount of, say, $500,000 and take a 30-year term, and let's assume 5% interest rate, which is a little bit higher than the rates at the moment, but this is just to prove the point. You're looking at about $619 per week as a repayment, and you're going to spend about $465,000 over that 30-year term on interest. So that means the property is going to cost you about $965,000 for a $500,000 property. You're probably going to pay more than double that, depending on how the rates go up and down. But again, just showing you that if you take a 30-year mortgage, you're going to pay a lot more in interest than if you shorten the period. Now let's compare that to a 20-year mortgage, using the same example of $500,000 over 20 years at 5%. Your repayments will be about $761 per week. Your interest over that term will probably be just over $291,000, which will give you a total cost for the property of $791,000. So just by reducing the term with 10 years, you're saving $174,000 in interest. That's a big amount. Now what you can do is you can actually make up the amount that you want to pay every month or every week or every fortnight, as long as it's more than the minimum. What you need to remember is the more you can pay up front now will just reduce the interest later on, which means you're saving a lot of interest and also reducing your mortgage term by quite a few years. So make sure that you can afford the mortgage. try to pay a little bit more, and this will save you thousands of interest in the coming years. Now, for those of you who don't have that magical 20% deposit, the bank will probably still give you the loan if it's above 80%, but they will charge you more for it. So they will either charge you a low equity margin, which is the percentage above the interest rate, and that can be anything depending on how much you're going over that 80%, or a low equity fee, which means they actually will charge you a fixed fee for the amount you've gone over that 80% mark. Depends on the bank, and also just make sure you negotiate that upfront before you go through with a loan, so that's not a big surprise when you come to the end. So as you can see from this video, it'll probably cost you anything up to about $5,000 to get your first home. Now it can be leased depending on how much you actually want to put into the contract, how much you're negotiating with your lawyer, so there's a few variables, but it could be up to $5,000. Now don't forget the banks will actually give you a cash contribution towards your home loan. This also depends on how much you're borrowing from the bank, and also the type of bank, and also when you're actually applying for the finance. In some cases, that contribution is actually more than all your costs put together, which means you kind of get some cash back at the end of it, which means you're not paying anything for your home loan up front. But do ask your bank for that contribution, and if you're using a mortgage advisor, they'll be doing that on your behalf, and they'll come back to you with a great offer. And usually it's a lot bigger than you can go to the bank yourself. Now, if you like this video, click the subscribe button and click the like button, and because you never know what you'll learn. And until you see me next time, see you later.